Thank you for listening to the Real Estate Voice podcast. I'm Vernon R.E. Jones, managing broker, owner of Jones Homes, and for 30 years, we have serviced the 7-county Denver metro area. Information continues to trickle in. The red-hot U.S. housing market continues to cool. Let me say this. As the housing market starts to cool, which is what we've needed it to do, home prices will not rise as fast. And hopefully will begin to balance out. But I will continue to say, though the demand for homes remains strong across the U.S. in August, there are clear signs that the housing market has passed its peak. That does not mean that the housing market is going to the tank. It does not mean that we're going through a real estate bubble. It just means that the market is slowly correcting itself. Now, most people hear correcting, they think of the stock market, and then the stock market corrects itself at 10% and may drop 3,000 points in one day. The housing market is not headed to that state. It is slowing down, cooling, which again is what it needed to do. Multiple reports found that pending home sales across 400 major metro areas were up 6% year over year in the 4 weeks that ended September 5th. Still, the almost 70,000 homes that went into contract represented a 9% decrease from the high point set in May of this year. The decrease in pending sales is just one indicator of a softening in the competitiveness of the housing market. The number of homes with an accepted offer within 2 weeks on the market fell 9 percentage points from the 2021 peak set in March. And the share of homes sold above asking price dropped to 50.1% from 55% in early July 2021. Most leading economists and people in the industry believe that the cooling off of the housing market to be seasonally typical. And most of us expect demand for homes to remain strong throughout the fall. Usually, August, September, the market always cools because a large portion of the buyer pool, people with families, kids, children, have a tendency to not want to move during the child's school year. So that buyer pool mostly drops off. They don't completely go, but they mostly drop off. Obviously, I would tell someone who is still looking to buy, this is the time to do it. Because you have less competitiveness in the market and home prices are starting to cool. Most economists, I'm in agreement with them, is that although it's seasonally typical, we still believe that there's going to be a strong demand for homes through the fall. People that did not get a home during the hot summer season may come back out and view this as an opportunity to buy, as they have less people to contend with. More homes were basically listed this summer, but they were of course quickly snatched up by home buyers. Bidding wars have become more rare. Also noted as seasonally typical is a 16% decline in new home listings from the 2021 peak in June. Overall, however, new home listings are down 7% from a year ago. And total active home listings are down 23% from 2020. I will tell you there were times that I looked at numbers and the active home listings were down 50% from 2020, 60% from 2020. There is a shift happening. This limited inventory and strong demand is reflected in the 14% increase of the median home sale price nationally of $358,250. Although this price is on par with asking prices in April of this year, it is down 2% from the all-time high set in June 2021. Multiple reports also find that an average of nearly 5% of the homes for sale each week during the month that ended September 5th had a price drop, which is the highest level of price drops per week since October of 2019. This may be a reflection in the median number of days homes that sold were on the market, increasing to 19 days from an all-time low of 15 days in June and early July 2021. Again, days on the market beginning to increase to 19 days instead of 15 days. That means a property's on the market 19 days on average before it becomes under contract. That varies, obviously. That's a median number, an average number. Some places are higher, some places are lower, but that's the average. While the average sale to list price ratio remains above 100% at 101.4, that means the homes are selling at 1.4% higher than what they're listed for. It is a decrease of 0.9 percentage points from its peak in June and July of 2021. It is still 2 percentage points higher than the 2020 high. While a housing market report by the National Association of Realtors found that existing home sales grew 2% in July from the prior month, first-time home buyers have continuously been squeezed by tight inventory and rising prices. And disproportionately so, because obviously first-time home buyers come in on an entry-level home price. And with these rising home prices, they're starting to get more squeezed out. We need wages to continue to rise to combat this, or we're going to get what I believe is going to happen, a cooling in the market, which I've said in this podcast. And the market is not going to collapse. It is going to cool down, slow down, which is what we need. We want growth. We want sustainable growth. We do not want growth that's just blowing everybody and you have to be rich to buy a home. That's not sustainable. Excuse me. If substantial relief for those home buyers comes, it may not be until the fall at the earliest. Housing starts that month fell 7%, which we all believe in the industry attributed to slow labor growth, choked supply lines, among other things. Such economic indicators are likely to improve slowly and gradually in upcoming months. I would tell you, if you got squeezed out in the summer, this is probably the best time to buy this season. And I generally tell and let my clients know that although this may not be the time you want to, because who wants to move during the winter, it is still the best time to buy because you have less competition. Any questions? Feel free to call me. 303-359-8218. This is Vernon Jones with Jones Homes and the Real Estate Voice. Thank you for listening. And as always, please be safe.